We at McKinsey Global Institute have been looking at what we call geopolitics and the geometry of global trade for the past 2 or 3 years. And we've been seeing that the geopolitical distance of trade, the distance of trade between geopolitically matched or unmatched partners, has actually been going down. And it's been going down since about 2018, but that's accelerated recently. And with particular tension, perhaps between the US and China, but also among other potential trading partners, in this piece of work, we looked at something that we defined as the rearrangement ratio, and to ask how trade might rearrange going forward away from some trading partners and perhaps towards others.
The rearrangement ratio is a ratio between the current imports from a trading partner and the available global exports in the global market. So when this ratio is above 1, the global market is insufficient to replace the disrupted trade between two trading partners. When it's below 1 or near 0, the disrupted trade between two trading partners is a small fraction of the global market.
Imagine cotton t-shirts. The US buys a fair number of cotton t-shirts from China, but there are actually a lot of cotton t-shirt manufacturers across the world, often selling to other countries, not the US. So in principle, US importers could rearrange their sources. They could go and they could buy t-shirts from one of those other countries. Think a lot of places in Latin America, think Turkey, etc., rather than from China, and you get a rearrangement of trade. But there are other products for which rearrangement isn't so easy. Take Christmas decorations. So the US buys $3 billion worth of Christmas decorations every year from China. But if you look at the total available alternative market of Christmas decorations, it's only $600 million. And so that means that there really isn't a way that Christmas decoration trade could simply be rearranged away from China. So what does all of this mean for companies? One of the major takeaways is that details, granularity, matters incredibly. You have some products for which, for example, rearrangement is easy. And for those, perhaps ramping up production elsewhere in the US is less likely to happen. On the other hand, you have some, and perhaps some that you wouldn't have guessed, the Christmas decoration example, but others, where ramping up is probably going to be necessary because rearrangement is as difficult as it is.
This has interesting implications for economic development strategies for countries around the world, for investment flows and infrastructure projects, logistics flows. The ramifications of this are wide and global.
There's no question that trade rearrangement promises to reshape the geometry of global trade, but it's going to be one of multiple things that happen, and firms are going to need to think about to what degree do they rearrange, to what degree do they reduce, to what degree do they replace, to what degree do they ramp up their production.